This is Steve Knight and welcome to Blackwell Global's Daily Market Update. Starting with the cable today, and the pound rallied sharply after the MPC votes were left unchanged. The members of the committee voted unanimously to keep rates on hold, although there was a hawkish tone to the statements which helped lift the pound. The pound is currently trading at 1.5036 and is yet to break through the high of the past 18 days. Moving on to the euro-dollar now, and the pair finished lower in a volatile day of trading based on continuing Greek default fears. The potential for a disorderly Greek default weighs heavily over the pair, and the negative sentiment is likely to continue at least until the IMF repayments are made. The market seems to be strongly pricing in the risk of Greek contagion, and this is currently capping any upside gains. On the news front, look towards the PMI figures for EU member countries to set the trend tomorrow. Turning to the Aussie dollar now, and the pair found plenty of support as Australian CPI figures came in at 0.2% versus the expected 0.1%. Despite the small pullback, the Aussie remains under the effects of a long-term bearish trend line and will need to break through that level to realise further gains. On the news front, the Aussie is likely to see plenty of action as US unemployment claims and new home sales data are due out today. Finally, looking at crude oil, and yet again the oil inventory figures this week exceeded market expectations, coming in at 5.32 million barrels. As it stands, the crude stockpile currently exceeds 483 million barrels of crude, leading to the market speculating on further downside for WTI prices. In the past few days, arguments for removing the current export ban on crude have also accelerated as an option in rebalancing the domestic crude market. That's all for today. Thanks for watching. This is Steve Knight with Blackwell Global.